My goal in this video is to change your life, to change somebody's life in every video that I make. That is my intention, and that is the intention that I set right here, right now, in the beginning of this video, that I'm going to change somebody's life, and that person might be you. And that's why I'm making this video. At Tactic Time Traders, we have a very special and unique way of analyzing the market. We are timing the market. Now, you can do that by only trading when the New York Stock Exchange is opening, for example, but you can also use other ways of timing the market. Another way of timing the market is using technical analysis, using mathematical formulas, or Fibonacci. It can also be very simple. You can use Fibonacci not only for price, but also for time. Let me give you here an example of how you can use the most basic, simple tool to get very accurate and very profitable signals in the market. It's called the cyclic lines. So you just search on your chart for an important low, which is right here, an important low, and now you go to the first important high. And let's see what this gives us as result. So right here we can see that this low took out the liquidity right there. And then we had this timing which created a low for us and gave us a buying opportunity. At this next timing, you can see that once this timing passed by, the market started consolidating. We were no longer in an uptrend, we started consolidating. Now at the next timing, you can see that again we took some liquidity here. We had a low at the timing and then we had an uptrend. Here we had another uptrend starting at our timing. Here we had another uptrend after the liquidity was taken, starting at our timing. Here we had another uptrend starting at our timing. Are you guys seeing it? You see the pattern, guys. Now what do you think that will happen here? And that's what we are going to analyze right now. So now we go over to step number 2, finding the liquidity levels. As you guys can see, we had an important high right there and an important high right there. So there is a lot of liquidity lying in the market at these levels, because that's where the stop losses are in the market. And the big institutions and banks, they always need to take out stop losses in order to create liquidity to enter their trades. Here you can see we had a beautiful low, and this is our sell side liquidity. The market came into our liquidity area, and you see that we created a beautiful wick. After that happened, you see that the market started consolidating. We were in a nice consolidation here in this area. What do we know about consolidations? We know that consolidations always provide us good breakouts. So if the market is going to break out, no matter which direction it is, it will be powerful. But here we know the direction that the market will probably break out. We have taken out that liquidity right there. So now we are expecting a downtrend. So if now we see a breakout out of the consolidation area, meaning we are expecting a huge decline. Let's see what happens, guys. We broke out here out of the consolidation area, and now we can go look out for sell positions. First of all, this could have been your entry, but what I like to do is step number 3, fair value gaps. Timing the market is the core of our trading philosophy, and this is exactly what we specialize in over at our Discord community, where we break down live market timings, liquidity zones, and advanced setups daily. It's free to join, and you can find the link in the description. So let's see if we can get more confirmation and if we can take an entry out of some fair value gap. At this moment in time, you should be drawing this bearish fair value gap. We already touched the bearish fair value gap, and this should have been your entry. But of course, you never know how much higher it will go. So you always wait for a breakout out of bearish fair value gap, which was right here. So you could have entered your trade right there. Now another way to enter the trade right here is to draw a horizontal line on this little consolidation area. Now once we break out this consolidation area, and if we keep respecting this fair value gap, we have an entry. You can enter on the fair value gap, on the breakout of the fair value gap. You can enter on the breakout of the structure of the consolidation. These are all good entries, guys. So let's enter right here with the sell position. And let's use the fair value gap for our stop loss. Now for our take profit, we are aiming at the sell side liquidity. Come on! Are you guys seeing it? Beautiful setup. Beautiful setup. This is the method that you need to use to become profitable every single day. Doesn't matter which market, which time frame, which kind of timing you are using, as long as you are using these market structures, fair value gaps, liquidity levels, that's how you will become successful in trading. We didn't reach the take profit area so far, but the market is still going because this is live right now. We can't go any further, but as you can see, we already reached a risk to reward ratio of 9. So you could have taken your profits out right here and you would have hit a risk to reward ratio of 9. That is insane, guys. There is no room for failure. If you are failing with this method, it's you who are failing. You in your mind, with your emotions, with your actions. Because it means that you are not following the strategy. You could keep trading blind and hoping for the best, or you could finally learn how to time the market like a pro. But hey, maybe you like donating your money to the market. No judgment. But for the rest of you, I'll see you in our Discord community, guys.